My guess is by the second quarter of this year, we start to see the jobs market crack. We'll even see the jobs data tomorrow, the non-farm payrolls. Let's see what it shows us. But when the jobs market goes, and look at this historically, you see a very slow tick and then it falls off a cliff. It's where everyone starts to say, uh-oh, here it comes. I've got to lay off these people. You're seeing the stresses in the business system. I do think it plays out this year.
Gareth Soloway returns to the show. He is the chief market strategist of InTheMoneyStocks.com and the president of Verified Investing Education. He's going to be kicking off the new year with his outlook for 2024. He'll be giving us his economic outlook as well as going over all the asset classes, and he'll tell us what his preferred asset for 2024 will be, the top asset of the year. But first, a message from our sponsor, NordVPN. On this show, we regularly cover how to grow and protect your assets, but one of your most important assets is your privacy. Every investor needs to protect their digital privacy and footprint against hackers and potential viruses. According to Chainalysis, 2022 was the biggest year ever for crypto hacking, with hackers stealing $3.8 billion in cryptocurrency. And according to Duke University, more than 80% of US companies claim to have been successfully hacked. One of the best ways to protect yourself and your privacy online is with NordVPN. Not only does NordVPN hide your identity online from malicious actors and criminals, but it also comes equipped with malware protection. NordVPN also prevents you from accessing dangerous websites, allowing you to enjoy your favorite financial content securely. And the best part is that it is easy to use. Just download and click. NordVPN is available for your phone or computer, and they're currently offering 65% off on a 2-year plan plus 4 extra months. Simply click on nordvpn.com/David Lin in the description down below to learn more. Gareth, Happy New Year. Welcome back. Always good to see you.
Happy New Year. Thanks for having me back.
Happy New Year to everyone watching. Let's start with some news items for the day. We'll talk about your trading sessions for the last couple of trading days since the beginning of the year, and then we'll get into your outlook for the rest of the year. So you were telling me offline that a few companies slashed earnings today. Interestingly, these companies haven't really seen a huge downturn in the stock price. I'm talking about Apple and a few others. Walk us through what you're trading this morning.
Yeah, so the big news this morning was Mobileye slashing their revenue forecast by 50%. The stock there got hammered. It has bounced off of its lows, but the bigger factor there is that Intel, that was a spinoff from Intel, and Intel obviously owns a huge chunk of it still. And so what we did see is Intel coming back in, and I do want to show my chart on this. I think this is going to be really interesting for people to see. So Intel, after opening lower, has climbed back up, but we could see that it was selling over the last few days, and this is the daily chart of Intel. So again, it has recovered a little bit, but we have seen semiconductors come on in, and the bigger question here is, for me, looking at this chart of the SMH, which is the semis, look at this trend line going back to the COVID lows, and it's just absolutely amazing, and it marked the recent top on the semiconductors. And again, the big question for me is kind of, is this just a pullback before we make a bigger move up again, or is this a bigger pullback? Is this a top that could last for a while? And to be honest, as a trader, it's more me watching and seeing what the chart's telling me. Right now, we don't know. It's too early on in the year.
Well, that chart looks a lot like the S&P 500. So let's maybe take a step back and look at the broader markets. Yep. So you were telling me how, well, you were talking about that particular chart and mentioned the pattern. So broad market overview then, can you apply the same analysis, what you just said to that chart, to the broad market?
Yeah, absolutely. So we have the S&P chart right here. And what we can see is we have had this little bit of a pullback early in the year. The first couple of days, we have a down move. Now, for me, it's more saying to myself, okay, is this a bigger move down? We don't know that yet. What I think is going on here, I think you had a lot of investors that into year end, they just didn't want to sell to incur the tax penalties. They didn't want to take the profits. Remember, the NASDAQ 100, biggest up year since 1999. We had 9 straight up weeks in the markets going into the end of the year. So really, it was people saying, hey, listen, I'm not going to sell. I don't want to pay taxes for this year. And then I think coming into the new year right now, that's what I'm looking at. It's probably some profit taking in the new year. Therefore, they don't have to pay taxes for another another 12 months or so. And I think that's why the pullback has come. Now, on the S&P 500, the only thing that would start to concern me here is if we violated this previous high right here. So if we take a trend line and draw it across, we can see that we're still well above that on the S&P. But if we started trading below, let's say 4,600 on the S&P, that's where you would start to get a little bit concerned on the overall markets, that it's a bigger move to the downside. One other thing to just note here is that the highest point here that we just reached was just shy of the S&P all-time high. We know the Nasdaq has already tagged and broken its all-time high, but the S&P just came very shy to it.
I'm gonna continue the conversation by asking you a question that I asked you on your show when I was in your studio a couple weeks ago. Everybody should check out the Verified Investing YouTube channel, by the way, link down below.
Thank you.
They've got some great daily news updates on the markets. I was there with you in Tampa, and I remember asking you what your outlook for 2024 would be, in particular, which asset you think would perform the best. I believe in 2023 you believed it was gold. What's your take for 2024?
Yeah, I'm gonna stick with it. I'm a sucker for staying with the favored player here. And again, people that are into crypto probably think that's nuts. You know, if you're a Bitcoin fan, we'll talk about Bitcoin in a little while. The stock market, to me, you know, I still believe that there is a recession coming. I still believe that, and by the way, this is probability based, right? If you look at history of the Federal Reserve intervening, they usually are late to the punch, meaning they'll probably keep rates a little too high for too long and will slip into a recession. And we've had one of the biggest expansionary periods, minus the COVID drop, which was very quick, but we've had such an expansion of the money supply that's, again, inflationary. I do think that we're still due for that sort of recession period. And I don't think the Fed is going to be able to drop rates what the market's expecting. We know the market's right now pricing in 6 to 7 rate cuts in 2023. The Fed said 3 rate cuts. So the Fed and the market are way off. And then we got jobs data this morning, the ADP private sector numbers that came in much better than expected. They were stronger, and jobless claims are still around 200,000, which is really very good for the economy. So the jobs market is strong. I don't know where people are expecting these cuts to come from. And then you have to look at inflation, right? Not to get into even a further discussion, but yes, inflation's come down dramatically. I think a lot of that was the supply issues that we were facing kind of during COVID. But now is the hardest battle. Can you get from 3 and change down to 2.5 or 2? That's going to be the hard part.
And can you walk us through your logic one more time as to why we're getting a recession? So you mentioned the jobs market is still strong. You mentioned that inflation is coming down. That's probably giving people a little more money to spend. So which indicators are you looking at that may point to a recession?
Yeah, so the preliminary indicators are very similar to '07, right? So in '07, the jobs market stayed strong for a long period of time. It was the last domino to fall. What we're seeing right now is we see a consumer that's getting more and more stretched. We see, again, personal debt on credit cards, all-time highs over $1 trillion. We see auto loan defaults starting to uptick more and more. Bankruptcies across the border at levels we haven't seen in quite a while, going back to, like, I think it's 2012 or so. And so again, the underlying fundamentals, even the PMI data has been weaker, usually below 50 is contraction. We've been generally seeing that continuing to come out. So all the underlying data to me is insinuating a slowdown in the economy. It's just the jobs market has stayed strong. And again, if the Fed is going to keep rates at their highest levels, and again, granted, you could go back in periods where we had higher interest rates, but the rate at which they ran up was unprecedented, from basically 0 to 5.5%. That would be unprecedented for the Fed to do a soft landing or no landing at all scenario. So my guess is by the second quarter of this year, we start to see the jobs market crack. We'll even see the jobs data tomorrow, the non-farm payrolls. Let's see what it shows us. But when the jobs market goes, and look at this historically, you see a very slow tick, and then it falls off a cliff. It's where everyone starts to say, uh-oh, here it comes. I've got to lay off these people. You're seeing the stresses in the business system. I do think it plays out this year.
Which sectors of the S&P were perhaps which types of businesses will likely see this pullback and lay off people first, you think?
That's a good question. I mean, I think we just heard about a few companies just in the last few days laying off 15% of their workforce. We've seen it actually all in 2023, the layoffs continuing. For me, it's probably more in the consumer-led areas. So for instance, Apple, I think Apple is already, you're seeing the downgrades to sell just a few days ago to start the year. We got another downgrade today on Apple. You have declining revenues in Apple, for instance, year over year, declining revenues. They've been artificially inflating their earnings by buying back stock, but that only takes you so far. If the consumer really is getting towards an inflection point, you're going to see these companies that have these kind of outlandish price to earnings ratios, historically, comparatively, those will be the ones that probably take the biggest hits on their stock price.
Now, do you agree with the idea that markets, financial markets, typically lead economic results? In other words, if the stock market is going up, it's anticipating economic recovery or growth. If the stock market is going down, it's anticipating some sort of recession. Does that usually happen? I ask this because last year has been a pretty good year for the stock markets, all things
Mhm.
considered. Um, does that mean anything to you when it comes to forecasting economic growth?
Yeah, so it doesn't mean a whole lot to me, and I'll tell you why, is that the markets have this dependency on getting positive results. So the market will tend, and this is when I say the market, I mean overall investors, hedge funds, all the rest of these, they need to see those returns. And so any sort of positive light at the end of the tunnel, they're going to spin into a narrative that is very, very positive. And I think that's what we've seen over the last 12 months, where it went from, oh my goodness, the Fed's hiking and hiking and hiking, and this is going to cause a really catastrophic situation, to now the Fed, we got that little ounce of the Fed pausing, maybe some rate cuts, and they're spinning it to be this miraculous solution that's going to keep this economy and the stock market running. And the one thing I would say is the market's expecting 6 to 7 rate cuts in 2024. You have to ask yourself, as an investor, as a logical, free-thinking investor, what has to happen to the economy for the Fed to cut 6 or 7 times? And again, those don't mesh, right? So yes, the market wants lower interest rates, but to get that many cuts, the economy would have to fall off a cliff, in my opinion. Again, I don't think I don't know about a cliff dive, but I don't think we're getting 6 to 7 this year.
Okay, so the market's going to be disappointed if they don't get 6 or 7, just three.
Yeah, and I think we've priced that. Basically, you saw the Fed minutes yesterday. The markets had another down day yesterday. We're recovering a little bit from some downside today. But I think the markets, when we heard the Fed minutes come out yesterday, they were a little disappointed. They heard, again, 3 rate cuts next year. That's basically what the Fed is choreographing. And that's underneath what the markets are pricing in. So there's this disparity. And we can kind of see that. Like if we bring up the 10-year yield, and I'm going to bring up my chart here in just a second. But if we look at the 10-year yield is trading just around that 4% level, right? And so again, we've had this monster readjustment in expectations from 5% on the 10-year down to as low as 3.75, 3.78. Now we're back just underneath 4%. But if you look at where the Fed funds rate is at around 5.5%, and here the 10 years below 4, that's pricing in just alone there 6 25 basis point rate cuts. I do believe that, again, the market is overshooting to the downside, and we are going to see rates move back up, probably back to around that 4.5%. So this equilibrium where it's right around those 3 to 4 cuts that the Fed is pricing in, that's they're telling us, that's where interest rates probably have to adjust back to over the next couple months.
Let's talk about specific asset classes, starting with gold, the asset that you think will perform the best. Give us some of your highlights in terms of your outlook. What are the key levels you're looking for? Where do you think it may end up as an average price over the course
Yeah,
of the
so
year?
So the gold chart here, we see the gold chart here. We continue to have kind of resistance around 2075. We've pierced it now pretty significantly. We had that one little pop up. Notice again that we really haven't closed above this level on a daily basis. So that's what you're looking for as a breakout tactic here. Now, one of the things that I do see, and I'll give you a price target here, and I'll show you exactly how I arrive at it, is that you do have an inverse head and shoulder pattern. And an inverse head and shoulder pattern is a bullish pattern on this chart. Again, you look at a bunch of these patterns, they tend to break out, and we can actually calculate out our target. So what we'll do here first is I want to draw on that head and shoulder so everyone can see. And again, simply put, there's your left shoulder, your head here, right up to that line. Here's your right shoulder, right? And so the idea is that if we break above this, this plays out. Now you might say, okay, well, how do we arrive at the target? And this is a great tactic for everyone to use at home when you find one of these patterns. Take the lowest point of the head and then draw a line straight up to the neckline. This is called the neckline, essentially upside down neckline of a human being, right? And you see it's about a $450 move. And so the idea is that you should do once you break out that $450 move should be replicated to the upside, which takes us to about 2,500 and a quarter. So $2,525 as a target price on gold. And that, again, whether it's hit this year or early next, I don't know. But in general, you can see that each cycle, so each cycle pattern lasts about a year, right? About a year is each part. So it implies that in approximately a year, we should be around $2,500, which again would be a tremendous return for gold. We haven't seen these type of returns in a year period in gold in a very, very long time. And one thing I just want to show you guys, and this is just a cool thing going to oil, I want to just prove to you guys how this works, this measured move tactic. And so here we have same thing on oil, right? So shoulder, this is actually the opposite. This would be called a head and shoulder pattern, which is a bearish pattern. So inverse is a bullish one. A regular one is bearish. And if we look at the neckline and we take the highest point of the head down to that, it was a $14 drop. And if we look at where we broke down and we do $14, look at where oil bottomed out before starting to catch a bid. It completed that target and is now starting to move up and chop sideways more. So again, just to show people out there how this is actually applicable and how it actually does play out. It's not always going to be 100% accurate, but it gives me a good basis to make these predictions on gold, for instance, should it break above this current level.
Just going back to stocks one more time, the recent pullback in the S&P, and actually, and that leads me to, I'm bringing this up because it leads to Bitcoin. The recent pullback in the S&P, is that just a minor correction, or is that the beginning of a trend? How are you looking at it from a technical basis?
Yeah, so as a pure technician with no bias on my future outlook for the economy, now obviously you guys know it's slightly negative on the future economy or decently negative, but as just a technician with no bias, this is just a minor pullback. Again, one of the things to watch here is this previous high here, it was a little consolidation high here, and as even we could actually correct to 4,600 on the S&P, and really you wouldn't even bat an eye with that. It's just like a standard pullback after about a 16% move straight up. It's if we get below 4,600 that I'd start to be concerned. And if we look at the NASDAQ, we'll do the same thing with the NASDAQ to get everyone kind of on par here, is that the NASDAQ, same thing. You have this previous top here, which aligns right with this area right in here. And so far, so basically, as long as we stay above 1,400 and 14,400, I think, again, this is just a run-of-your-mill pullback in the NASDAQ with the potential to even go higher unless we break 14,400. You get below that and you start trading down here. Now you're talking about a failed breakout, right? So if you look at this high pivot, this was a breakout. If you fail that breakout, it means you trade back below that level, and a failed breakout can often lead to major downside in this situation.
Let's turn to another asset class. So Bitcoin, I will segue into Bitcoin. Similar chart pattern, slight pullback from the recent high. Same analysis?
Yeah, so same sort of analysis. In fact, if we look at the Bitcoin chart, we had that kind of flush out yesterday. Bitcoin likes to do that on occasion because there's so many people using leverage. It can kind of just sweep out the leverage, take people's money that are keeping, their liquidation prices are so close. But if we look at the chart very simply, and I love to keep charts simple here, look at the trend line here, and this is a perfectly parallel trend line right up here. And look at how you're just staying inside of this channel. And the way I look at this is simple. If we break the high end of the channel around 46,200 or so, there's an upside target of 48,000 to 50,000. And I want to show you where I get that from. It's actually a really powerful level. Take the highest point from 2019, draw through the lows of the bull market cycle, and just extend that line out, right? And what we get is about 49,000, give or take, right through there. You also have a trend line right here. That's a high pivot right there. Draw that out. Gives us about 48,400. And lastly, and by the way, as a technician, I'm always looking for a confluence of levels. So where do most of the levels convene together? We do a Fibonacci retrace from the bull market high to the lows of the bear market. And the 618 Fibonacci retrace is right there, right around 48 to 50,000. And so in other words, that's going to be a major roadblock right around 48 to 50. Whether or not we get this approval, I think at this point we all know the approval is coming for the spot ETF. But the bigger question now is, does it get through 50,000? If it can't, I do think there's a rejection where we actually could trade back to 30,000 at some point, which would be a retrace to the big breakout at that 31,000 level.
I think people don't give you enough credit because earlier in the year, not this year, but last year, 2023,
Mm.
like in the summertime or something, you were telling us that should Bitcoin break above 35,000 and sustain that level, we would get a big breakout. And
Mhm.
we didn't really revisit that call, but it turned out to be another correct call, Gareth. So
Yeah, and I think that's
that's done,
important
yeah.
for people to understand is like, on your show, I've talked about, when we were at 68. In fact, I was in Dubai with you live when we did this interview. We were talking at 68, 69,000. It was going to go to 20. It went to 20. And then I said, listen, if the stock market really collapses, we could actually go as low as 10. We never really saw the stock market collapse. And therefore we started to look at the 10, the 30,000 level, 30, 35,000 breakout above that. And I'm a trader. So, you can be bullish in the short term, but you have to adjust that when chart levels are broken. And that's a good point that you're making on that.
I do remember, I think the most bearish call you've given me, and you didn't say it's going to happen, but I did ask you what the worst case scenario would be, and you said $4,000. Is that still
Yeah.
possible? Is that still within the realm of, probabilities today?
No, I don't think so. If that happens, then Bitcoin's in a lot of trouble overall. For me, again, is it possible? Like if we saw a 65% correction, if we saw a
Well,
2008, 2009
anything's,
event
let me
in
rephrase,
the
anything's,
financial markets,
yeah. Sorry, let me rephrase.
right.
Anything's possible, right? Is it high enough probability for you to worry about as a trader, is basically what I'm trying to say.
No, no, not as a trader. At this point, basically I'm a buyer at 30,000 a support. If it breaks support, then I have to reevaluate. I think it goes back towards that 20,000 range. And then if 20 breaks, then you're looking at that low of 15 and change. So it's very level by level as a technician. And you just have to accept it. Like when a level, just like when 30,000, 31,000 broke, then you had to go bullish for a potential upside move. Max move is up to 48,000 or so, give or take. And then again, if on the downside we break this channel here, and again, I'll just pop up my charts one more time to show. So if we break below 41.4 or so on a daily closing basis, then you go to 38, which is right here, and then eventually you could retest 30. But I'll be trading it long and short all the way around. I mean, that's what a good trader does, and I'm able to make a lot more money than if I'm just a buy and hodler essentially.
Mm-hmm. All right, so we talked about gold, the stock market, Bitcoin. We talked about oil. Let's touch on the DXY now. Uh,
Mhm.
Big mover last year, very volatile for what the DXY usually does. Now,
Mhm.
given your outlook on rates, I'm curious just to see or to I'm interested to understanding what you think the DXY will do this year relative to the overall economy and relative to interest rates.
Yeah, so the dollar we did see it come, quite a drop from the highs, right? We were at 107 over here, and obviously the previous year in 2022 we topped out at 114, and so it looks to me like we're now making lower highs, and you can see again we came down here to this low trend line, which is a connector from this pivot to this pivot, and right there gave us the low on the dollar. We then retraced up to this point, but at this point I'm really thinking that the dollar is going to be making lower lows and lower highs, so you're going to get bounces like we're seeing now. We could even bounce a little bit more, but I do think the dollar continues to kind of inch lower. The big level on the dollar to watch, and I'll give you guys the one to watch here, is this line here at 99 and change, right? So we could see we tested it in 2023 in February, or check that in July, and that was this pivot. If that breaks, then you have something bigger in store for the US dollar. But right now, we're still holding above that major pivot point. And so I would kind of remain negative overall, but expect bounces at key levels.
Does your DXY, suppose the DXY moves dramatically in either direction, would
Mhm.
that change your outlook for gold at all, given how they've been inversely correlated in the past?
Yeah, I mean, anytime the dollar moves up, there's always a chance that gold could sell off. But the one thing I would just point out is, especially this latest move up in the dollar seems to be coordinated with a little bit more tensions and escalation in the Middle East. I think people were kind of asleep into the end of the year. And so that's the other caveat to it, is that if the dollar starts to move up, is it because of instability geopolitically or instability overall in economics, where gold actually could be a recipient of money flow as well. And we have seen periods in history where the dollar has gained and gold has also gained. Maybe not as much, but there is that flight to safety possibility. So for me, it's continuing to believe that in almost any scenario, gold does very, very well, right? Economy stays good. It's going to keep inflation elevated. You probably see, again, gold perform relatively well. If things get really catastrophic, people run to gold for safety. Yeah, the dollar, again, could fall in those scenarios, but it really is most scenarios leading to gold going higher.
Excellent. All right, Gareth. Great start to the new year. Happy trading for
Yeah.
2024. Give us your New Year resolution. Just one.
So in general, there's no, I don't really do New Year's resolutions. But I will say this, my goal is to be better than I was last year. And I think that's really all we can strive for. So David, it's always awesome. And I can't wait to get you back here in Tampa to hang out a little bit more and do some more content. But thanks for having me on, buddy. It's been great.
Yeah, that was a lot of fun. Yeah, we'll see each other soon in your studio. Thank you for watching. Happy New Year to all. Write in the comments what your New Year's resolution is. And if you haven't already made a resolution to follow Gareth, you should put the link. We'll put the links down below. Thanks again, and thank you for watching.